Hey, this is Warren Redlick. I am incredibly excited about the Q4 2020 investor call that we just heard today. I'm going to go through this call with you. I'm going to do this a different way than I normally do it. You're going to see me wearing my headphones for part of it. Just so many amazing details that came out of this. Couple of highlights. Model S and Model X refresh happened. For me, a monster thing was Elon endorsing my battery revenue model. Not my battery revenue model, but Elon talking about how to model Tesla's growth and Tesla's business based on what sounds like almost identical to my battery revenue model that I've been talking about for months. There's a lot of smaller details that matter a lot. So we're going to go through this. This is probably going to be a longer than normal video for me because I'm going to go through the call, take selected portions of the audio, and then explain what mattered from that bit of the call. If you don't have a lot of time, my suggestion is you save this video and come back to it later. I will probably do a shorter summary video later this week or early next week, highlighting key points. But if you really want all the details, it's going to be in this video. And if you want to understand why Tesla is worth way more than $850 a share, why it's worth $5,000 a share more right now, I'm going to explain all that in this video. Are you ready? Let's go.
So just to recap the year, 2020 was a defining year for us on many levels. We delivered almost as many cars last year as we produced in our entire history. This full year, we achieved free cash flow of nearly $2.8 billion after spending more than $3 billion on building new factories and other expenditures. We're also building Giga Berlin and Giga Texas, which we expect to start production later this year. Regarding the new Model X, S and X, we are launching we're super excited to announce the new Model S and Model X Plaid are in production now and will be delivered in February. Model S will be delivered in February and Model X a little later. The Model S Plaid, we're actually in production now and we'll be delivering next month. So this is a tri-motor Model S with a completely new interior. There are actually a lot of great things about this. I'll do another call about the Model S later. Model S Plaid will be the first production car ever that is able to go 0 to 60 miles an hour in under 2 seconds. No production car ever has been able to get below 2 seconds, 0 to 60. This is a luxury sedan that is able to go 0 to 60 in less than 2 seconds, and will have the ability to seat up to 7 people with the third row. Pretty nuts. This is faster, to be clear, than any car. It's not like there was a different type of car, like a two-door sports car, that was able to do better faster than this. This is the fastest accelerating car ever made that is allowed to go on roads in history. That gets into the details of all the Model S changes maybe later this week or next. Yeah, we think it's probably the best car of any kind at any price available in the world today.
Probably the biggest item that you're going to see in the news in the next couple days is about the Model S and Model X refresh. I don't agree that that's the most important thing from the investor call today, but it's probably the most exciting and easiest to comprehend thing. Model S and Model X are refreshed, not exactly how I expected, and I'll get into that in a minute, but it was startling how incredible this is going to be. And I would say it this way. First of all, the long-range Model S price is up $10,000 to just short of $80,000 for the vehicle. Its range is longer again. I think it was 412 miles of range. The performance, the 0 to 60 time for the long-range model, not the Plaid model. There's no performance model anymore. It's long-range or Plaid Plus. We'll get to that. But just the long-range model, the $80,000 model, is going to do 0 to 60 in 3.1 seconds. This is faster than the BMW M5, which costs over $20,000 more base model. This is an astonishing performance sedan, faster than many, many sports cars, for $80,000. This is stunning. Another key detail about Model S that I don't think most people notice, the weight of the long-range Model S is down about 300 pounds. this vehicle is significantly lighter. Later in the call, Elon's going to talk about batteries, and it's still using the 18650 cell. This is one of the things I got wrong. It is not using the 4680 cell. I thought they were going to put the 4680 cell in the refreshed Model S and Model X. I thought they were going to do structural battery pack. They're doing neither of those things. They're using the 18650 cell, but he mentions later in the call, I think in response to a question, that they're using a new and better chemistry with the 18650 cell. We'll talk about that later. The interior's refreshed. It's going to have a 17-inch horizontal screen. There's a lot more to the car. I might add more to this video to explain more details about it. Stunning. And then Plaid. So at $120,000 will be the Plaid Model S, which is in production now and will be delivered in February. Under 2 seconds, 0 to 60. Quarter mile, I think they said 9.3 seconds. This is amazing, stunning performance. This is going to blow everything out of the water. $500,000 hypercars are slower than the Plaid Model S, and Plaid Plus is coming towards the end of 2021. This is the regular Plaid. At Battery Day, they talked about Plaid coming late 2021. They appear to have moved up. I guess they've changed performance to Plaid because it's so fast. It's sub 2 minutes. It's under 2 seconds, 0 to 60. Now Plaid Plus, which is comical for Elon to choose a name like Plaid Plus. Plaid Plus will be coming at the end of the year. It's going to be even faster. Both Plaid and Plaid Plus will be using the tri-motor system, which is new. We haven't seen this before in a actual production vehicle. 3 motors, some extra special details about that I think Elon's going to get into later. I didn't fully understand what that was, and he's going to have to explain it to us. There's something special about the drivetrain that we're going to learn in the next few days. Let's listen to more of what Elon has to say.
We've made massive progress on full self-driving. I recommend watching the videos of our public beta. So we've got, I think, almost 1,000 people in the beta at this point, and with each successful release of the beta of the FSD software, it's really improving rapidly. It's now very common for I drive the latest builds. It's very common for me to have no interventions on drives that I do, including drives to places I've never been to. So these are not pre-planned routes. The car's never been there before. It's more common than not for the car to have no interventions, even on a complex drive.
I just wanted to touch base here on one thing, which is he mentioned the beta testers. There's about 1,000 people who have FSD beta. I didn't realize it was that small of a number. And he referenced videos of it. So Kim Paquette is probably the one who's doing the most FSD beta videos, but there's a number of Tesla YouTubers and Twitter users who are posting videos of themselves using FSD beta. Sofian Fraval's another one. He mentioned doing drives with 0 interventions, and he's doing them himself. Whole Mars blog, Omar Kazi, posted a video going from San Francisco to Los Angeles, and I think there was maybe 1 or 2 interventions that he really felt were unnecessary. And then he did another drive going from Los Angeles back to San Francisco. I believe in both of these he had to take control to pull into a charging station. But other than that, 0 interventions from Los Angeles to San Francisco, which is 300 or 400 mile drive. So Elon is seeing tremendous progress with FSD beta. He's going to talk about that more later in the call. But the FSD beta videos that he mentioned, if you go on YouTube, if you go on Twitter and you search for FSD beta video and click media on Twitter, or just search FSD beta on YouTube, there's a lot of videos out there. It's really impressive what it's doing. I've seen Earl of Frunk Puppy has some videos too. A lot of great videos. It's amazing what it's doing, and it's only getting better.
And this is basically, I'm highly confident the car will be able to drive itself with a reliability in excess of humans this year. This is a very big deal. And thinking about how does one justify the value of the company being where it is? I think there is a way, just with back of the envelope math, to potentially justify it, where if Tesla ships, let's say hypothetically, 50 or $60 billion worth of vehicles, and those vehicles become full self-driving and can be used in robotaxis, their utility increases from an average of 12 hours a week to potentially an average of 60 hours a week if they're capable of serving as a robotaxi. So that's like roughly a 5x increase in utility. But let's, even if you say like, okay, well, let's just assume that the car becomes twice as useful as, not 5 times useful, but nearly twice as useful. That would be a doubling again of the revenue of the company, which is almost entirely gross margin. So it would mean it would be like, okay, if you made $50 billion worth of cars, it'd be like having $50 billion of incremental profit.
So here Elon's talking about how to model the value of Tesla as a company, looking only at vehicles and saying, look at the number of vehicles we produce, look at the revenue that's generated by those vehicles. And then he's talking about doubling the revenue because FSD adds that much value to the vehicle. I think he is massively understating the value proposition of FSD. For example, when he says a normal vehicle drives 12 hours a week and Robotaxi would drive 60 hours a week, FSD vehicle operating as a Robotaxi would drive 60 hours a week, that seems a very small amount of time for a Robotaxi to operate in a week. As I see it, the vehicles start at 6 a.m. and run to midnight, which is 18 hours a day, at least 5 days a week. That's 90 hours a week. And then you have weekends. So I think saying they would only operate 60 hours a week seems very low. And I think we might be more likely to see them operating 100 to 120 hours a week. And so it's not just a 5x, it's practically a 10x increase in value. And by my math, that works out to 300 miles a day. The numbers work out to about 100,000 miles a year if it's used in that way. Elon, that's my view. Obviously, Elon knows more than I do. It's hard to tell whether he's sandbagging or he has a different projection in mind. But that's sort of the Robotaxi model I've talked about before without the full value that I attribute to it. I think he's underestimating or understating how much value Robotaxi adds to the vehicle. And he kind of says that if we only double it, well, maybe that means he thinks we should really be 5xing the value, which is absolutely stunning if you think about that. And maybe it should be 10xing the value, which is mind-boggling.
And if that were the case, then if you do 20 PE on that, it's like $1 trillion. And the company's still in high growth mode. So I think there is a way to sort of like, justify the valuation of the company where it is.
So right there, Elon said use a PE ratio of 20 combined with the amount of revenue, combined with the amount of profit that's generated. And he says, okay, you can get to $1 trillion valuation, which is, currently Tesla is valued under $1 trillion. But a PE ratio of 20 is comically low for a growth company. Apple has a PE ratio of 30. Amazon has a PE ratio of 90. If you assigned a conservative PE ratio to a company growing as fast as Tesla is growing and said 40, that would make it a $2 trillion company. So he is massively understating the value of the company. I think 40 is low for a PE ratio at this point in the company's growth.
Just the cars, nothing else. Cars with FSD. And I suspect at least some number of investors are taking that approach.
Again, he's talking about just the cars. He's excluding from that valuation, which is the way I've done this with the battery revenue model and the Robotaxi model, excluding the value of energy. Just looking at the cars, excluding solar, excluding battery packs, grid storage. Even with that, you get to well over $1 trillion valuation. Taking those things out, it is worth so much more than its current valuation.
I think 2021 is going to be even more exciting, and you don't know what to expect in a given year. Obviously, last year we did not. There were many things we did not expect. But assuming that 21 is a relatively normal year from an external standpoint, I think it's going to be a great year for Tesla. Many great new products coming out. We've got factories that are advanced factories that can start up production. It'll also make it easier having a factory in Berlin, one in Texas that can just from a logistics standpoint, Texas can help supply the eastern half of the U.S. and Berlin can help supply Europe. And there's just fewer cars on boats, much less capital tied up, with the cars that are, on boats or being transported to customers. And I think the fundamental efficiency of the company will be much better with the factories, at least having factories on each continent and having 2 factories in the U.S.
And I think our CFO, Zach Kirkhorn, has some opening remarks as well.
As Elon mentioned, 2020 has been an extremely successful year. On cash, we continue to generate strong free cash flows, reaching a record $1.9 billion in Q4, alongside growth and investment for future programs. Additionally, we've been able to reduce our use of debt and various working capital lines, including settling $2 billion of convertible debt in Q4, which will continue into Q1.
So right there, just some early details. Free cash flow, $1.9 billion. That's money coming into the company. There's accounting things that go on that show profits is one thing, and free cash flow is how much cash is coming into the company. Some of the revenue that they get, they can't count. For example, FSD revenue is not fully accounted for. They're holding that until they release more features. So they brought in $1.9 billion in free cash flow. This is huge. And they're using some of their cash. They have this big cash pile, and Zach's going to talk about this again later. That's Zach Kirkhorn, the CFO. They're using some of that cash to pay down debt, which means the long-run interest expenses are going to be lower. So right now they have certain expenses paying off interest, and there are some convertible bonds that they paid off that reduces their overall debt and reduces future interest payments. So this is really good sort of fundamental financial stuff for the company. Not the exciting technical manufacturing vehicle stuff, but it's important for the fundamentals of the company going forward in terms of profitability.
For net income, we achieved our first calendar year and 6 sequential quarters of profitability. In addition, auto gross margin excluding credits improved from 2019 to 2020, despite reductions in ASP and inefficiencies from new product launches and transitions. Automotive gross margin in Q4 was primarily impacted by 2 things. First, we invested in improving our products built in Fremont, including converting over to the new Model S and Model X, launching the single-piece castings on Model Y, and introducing heat pump on Model 3.
So key point there, the single-piece casting that we've seen in some videos at Fremont is for Model Y and Fremont. I was suspicious. I thought maybe the single-piece castings were also being used for the Model S and Model X refresh, and I'm going to tell you when I'm right. I'm going to brag when I'm right. I'm going to admit when I'm wrong. I was wrong about that detail of the Model S, Model X refresh. They are not using single-piece castings. They are not using structural battery pack. He didn't mention it here, but they're not using 4680 cells. But there's a lot of good news in what's happening, a lot of improvements, and they did, in fact, have a substantial refresh of S and X.
What's most important here is that we've accelerated the growth in service capacity and will continue to drive capacity expansion as fast as possible. On energy gross margin, we saw an impact from solar roof-related ramp costs and typical seasonality in the lease PPA business. OPEX as a percentage of revenue continues to reduce despite impacts from items mentioned, as well as increased investment in development of future products.
So a couple of important details there. Auto gross margin is up. Solar roof is ramping, and they had expenses for the ramp, but solar roof production is going up, and that's going to be a huge revenue feature. He mentioned that they've accelerated the growth in service capacity. There's a couple things there. One, the number of service centers that are available to service vehicles that need help, that have something wrong with them that need to be fixed, has grown. And I don't know if he mentions it here, but they've rapidly expanded the supercharger network, and that's in the slide deck. The number of supercharger stations is up, and the number of supercharger ports, the places you can plug in within a supercharger station, is up, and these are dramatically larger numbers. They have radically expanded charging capacity, places you can go and charge your Tesla, and service capacity. This is huge for offering a compelling product and service environment where people feel more comfortable buying a Tesla. They've said before, they need to have more charging stations closer to people, more service available closer to people, so people aren't afraid to buy the car or worried that they won't be able to get service or they won't be able to charge.
On energy gross margin, we saw an impact from solar roof-related ramp costs and typical seasonality in the lease PPA business. OPEX as a percentage of revenue continues to reduce despite impacts from items mentioned, as well as increased investment in development of future products.
Just real quick there, OPEX is operating expenditure, operating expenses. That ratio is coming down. In other words, the cost of doing business, the operating expenses are sort of the cost of operating the company. That's coming down as a share of revenue. That's a really good sign that indicates increased profits in the future. You can lower your expense ratio, it means you're making more money.
Finally, the early settlement of our convertible notes resulted in an additional $100 million of interest expense for the quarter.
When you see their profit numbers, you have to take into account the fact that they spent an extra $100 million they didn't anticipate. They spent an extra $100 million on interest expense, which is great because they're not paying that in the future. So future profits will be higher because they don't have that expense anymore.
As we look forward, 2021 may be our most meaningful step forward yet, as we see the benefits of longstanding investments in capacity and technology. The range of possible outcomes this year is wide, given the magnitude of launches. Thus, a few things we should keep in mind. We continue to expect a long-term volume CAGR of 50%, of which we may materially exceed this in 2021. As we increase production rates, volumes will skew towards the second half of the year, and ramp inefficiencies will be a part of this year's story and are necessary to achieve our long-term goals.
So this is not Elon, this is Zach saying that growth will exceed 50% per year. 2021, Zach, not Elon, Zach is the conservative one, and he's saying he expects growth to go over 50%. Which means if they delivered 500,000 vehicles in 2020, they're expecting to deliver more than 750,000 in 2021. They did not give a number for vehicle delivery guidance for 2021, but they're talking about more than 50% increase. A lot of people who follow Tesla think they're going to go over 800,000. In the slide deck, they showed current production capacity of 1.05 million between Model 3 and Y at Fremont, Model S and X at Fremont, and Shanghai, 1.05 million. And we expect, and they have said, that Berlin and Austin will both be coming online during 2021 delivering vehicles. Now, capacity doesn't mean production or deliveries. It doesn't mean they're going to produce 1.05 million vehicles. But maybe they produce 800,000 out of those two factories, and then they get additional production out of Berlin and Austin. It could mean they get close to 1 million vehicles in 2021. They are deliberately not giving guidance. There's a lot of, as he said, there's a wide range of possibilities. But if things go well, we may see 1 million vehicles delivered in 2021. I think that's a little bit optimistic. Sometimes I'm over-optimistic, and I think it's going to be 1.2 million vehicles. But we're certainly seeing, and Shanghai's number in that 1.05 million, Shanghai has not fully ramped yet. So Shanghai's capacity at the end of this year will be higher than what was shown in the slide deck. So total capacity at the end of the year without Berlin and Austin is probably going to be 1.2 million or 1.3 million. Add in Berlin and Austin, we may be talking about a production capacity of 1.5 million run rate at the end of 2021, which bodes really well for production in 2022, which we'll talk about a little later.
Specifically for Q1, our volumes will have the benefit of early Model Y ramp in Shanghai. However, S and X production will be low due to the transition to the newly re-architected products.
He talked about S and X being low in terms of volume in the first quarter, but S and X don't matter a whole lot. I talked about S and X earlier, or the refreshed S in particular. It matters in a sort of sense of branding the company and showing the tremendous performance of EVs and showing how out of date and old technology internal combustion engines are. But in terms of revenue for the company and volume of production, those are not high volume vehicles. They weren't high volume vehicles before. They're not going to be high volume vehicles now. Model 3 and Model Y are the high volume vehicles. Model S and X might reach 100,000 vehicles in a year, and probably not this year, and I don't think they have before. But Model 3 and Model Y together are heading for 1 million vehicles, 2 million vehicles a year by 2022. Model S and Model X are nice and they're great, and I would love to have either one of them. They're fantastic vehicles. but they're high-end vehicles that most people can't afford. It's the affordable cars that matter a lot more.
Additionally, we're working extremely hard to manage through the global semiconductor shortage as well as port capacity, which may have a temporary impact. We will continue to invest heavily in supercharging and service capacity while driving reductions on cost, including OPEX as a percentage of revenue. Global demand continues to outpace production, and we're moving as quickly as we can with a focus on the long term.
Sometimes you will hear from Tesla Q that there isn't enough demand for Tesla vehicles. And remember, this is Zach talking, not Elon. Global demand exceeds production. They cannot make enough vehicles to satisfy demand. Try as hard as they might, they make as many vehicles as they can make. Global demand exceeds what they can produce. There is no demand problem for Tesla.
Thank you very much. And now we can jump straight into questions from Say Technologies. What is currently holding Tesla back from being the market share leader in solar?
Yeah, so we're actually seeing tremendous growth in solar quarter over quarter last year. And we had our best quarter since, I think, 2018 in Q4. So we do actually expect to become the market share leader in solar and then go far beyond that. Unfortunately, there were a few years there where we had to devote the whole company to Model 3 production and building. We have to basically take the whole company, including a bunch of people that were on solar, and have them work on cars. But now we've got a little more bandwidth. We're putting a lot of attention on solar, and it is growing rapidly. So I think it will not be long before Tesla is by far the market leader in solar.
I thought that was a stupid question because we know the problem with why they're not the market share leader. They can't produce enough solar and battery packs, grid storage, in order to meet demand. They don't have the batteries and they don't have the production to become the market. And he's going to talk about this in a minute. They're the price leader. They're delivering the lowest price for residential solar. It's just they can't make enough. And that's coming. They're expanding production, as Elon explained. Production was held back by the need to ramp a Model 3, and now that they've gotten through the ramping problems with Model 3 and they're ramping Model Y and everything's going well with vehicles, they can devote more attention to ramping solar, which is happening. And the Q4 numbers for solar production and deliveries and grid storage deliveries was very, very good. A big growth number.
Another really important part of the solar strategy is achieving an industry-leading cost structure, which then allows us to have industry-leading pricing. And so that's something that we've accomplished over the last year in terms of getting the cost structure in the place that it needs to be. And as Elon mentioned, this is a really important part with industry-leading pricing to become the leader in the space.
Yeah, and actually an important part is achieving better integration between the Tesla Powerwall and the Tesla retrofit solar and Tesla roof. And we're confident we'll have excellent integration with Powerwall and Tesla solar, whether it's retrofit or the Tesla solar glass roof before the end of the year. So it's really, I think we've got a good strategy. As Zach mentioned, we're focused on reducing the amount of time and the complexity of the install, and we're making great progress in that regard. And I think we'll have something that's really dialed in this year.
So one of the things he mentioned there caught me off guard was the integration of solar on the roof, whether it's solar roof or solar panels, with Powerwall. I thought it was already very well integrated, and I'd seen videos. I don't have it myself yet. For those who don't know, I have ordered solar roof. There is a delay in South Florida making sure that solar roof meets wind standards because we have hurricanes here. I believe I'm going to have my solar roof within about 6 months. But I've seen, videos and seen people talking about it. It seemed to me like it was already a really well integrated system, but apparently there are some big advances being made to further integrate Powerwall with solar roof and solar panels. So that will be interesting to see. Getting costs down is key. Getting install times down is key. Elon has expressed concern before that it was taking too long to install the roofs, that he thinks they should be able to do an install in 1 day. So they're working on the processes. This is something that's been discussed before. They did just do a 1-day install, but it was a fairly small and simple roof. Larger installs have taken as long as 4 days, and they're working on how they package the roof tiles and set everything up so it's easier for the installers to not have to go up and down ladders too many times. That when they go up the ladder, everything they need to do a lot of work is there. Every time they have to go down the ladder and come back up slows down the install. Other things slow down the install. So if they can get the install times down and get the installs done faster, that will mean they're able to do more roofs. The quicker they can do the install on one roof, the quicker they can move on to the next roof. And that helps lower cost and it helps increase volume, which makes Solar Roof, what he said before, a killer product.
Could current owners get ability to transfer their FSD to their next vehicle? This would be a huge for loyalty and overall increased sales of vehicles while offering more FSD sales on used vehicles.
So people keep asking Elon on Twitter to make FSD transferable. You buy a Tesla, you buy FSD, and then you decide to buy a new Tesla. They want to be able to take the FSD that they paid for on the first vehicle and transfer to the second vehicle. And in short, the answer was no, we're not doing that. Some people aren't going to like it, but their attitude is we're not doing that.
Unfortunately, we're not considering that at this time. We're not currently planning on allowing it to get transferred. But we will be offering subscription pretty soon in the next month or two. So that should address a lot of people's concerns for being able to get it.
That's something that I've heard them talk about before, that people will be able to get FSD by subscription. I personally do not understand the subscription model, and maybe at some point this will make sense to me. But the subscription model is probably going to cost more per month than if you bought it up front. It wouldn't make sense to offer the subscription for less per month than if you bought it up front. And if you did, then why would anybody buy FSD? You would just subscribe. So I'm not sure where that's going. I'm not sure what the model is, why people would. And if you wanted FSD, why wouldn't you want it all the time? You know, the minute you have it, you're not going to want to give it up. So I just completely do not understand this. At some point, somebody's going to explain that why the subscription model makes sense to me. To me, buy it up front. Why on earth would you subscribe instead of just buying it? And I'm baffled by this.
Can you give us a progress update on dry coating of the battery electrode? At the battery day, Elon said, "I would not say this is completely in the bag as the yields were low."
This is really big. Listen to this.
It's true. The in-house cell manufacturing system we revealed at Battery Day contains new processes and equipment. So we did expect some unknown unknowns and technical challenges to arise through the production ramp. The Cato team, however, has been able to solve each manufacturing problem presented to date and continues to improve yield and rate week over week and month over month as we move up the production S-curve. At the same time, the cell engineering team's refined designs and deepened understanding has reinforced our confidence in the dry process and 4680 design, meeting our performance and cost targets. And from a capacity perspective, we have 10 gigawatt hours worth of equipment landed at Cato. The production staff is nearly all hired. Our material supply chain is established, and the team is on track for full production ramp this year. Meanwhile, we've developed enough engineering confidence with our 4680 design and the production process and equipment to kick off manufacturing equipment and facility construction to support our 100 gigawatt hour 2022 goal.
So first of all, what they announced at Battery Day, the production, the pilot line in Cato Road in Fremont is going well. They haven't hit any bumps in the road. It is improving as expected, if not better than expected. And they are getting ready to start going for their 100 gigawatt hours in 2022 target, that they will be able to produce 100 gigawatt hours of 4680 high nickel cells in 2022. I'm going to talk about that more later in the call or in a minute. But great progress on 4680, dry battery electrode, everything going on with the battery, everything going on with what they talked about Battery Day is going well. They're making progress. The engineering is going well. They're making improvements, and it's looking good.
Why are you confident Tesla will achieve level 5 autonomy in 2021? And why is Dojo not necessary to get there?
I guess I'm confident based on my understanding of the technical roadmap and the progress that we're making between each beta iteration. As I was saying, it's now not remarkable at all for the car to completely drive you from one location to another through a series of complex intersections. It's improving the corner case reliability and getting it, to 99.9999% reliable with respect to an accident. Basically, we need to get it to better than human by a factor of at least 100% or 200%. But this is happening rapidly because we've got so much training data with all the cars in the field. And the software is improving dramatically. We also write the software for labeling. And I must say it is quite challenging. We're moving everything towards video labeling, so it's all video labeling, all video inference. And so there's still a few of the neural nets that need to be upgraded to video training and video inference. And really, as we've transitioned each net to video, the performance has become exceptional. So this is like a hard thing. The video, the labeling software that we wrote for video labeling, making that better has a huge effect on the efficiency of labeling. And then, of course, the holy grail is auto labeling. So we're putting a lot of work into having the labeling tool be more efficient when used by a person, as well as enabling auto labeling where we can.
Key details there. Number one, he mentioned getting to 99.999%. He mentioned getting better than human by 100% or 200%. Some of those numbers are a little unclear. What he means by better than human by 100% or 200% is unclear. Sometimes he says it has to be 10 times better than human. I thought that was 900% or 1,000%. So I'm not exactly sure what he means by 100% or 200%. The 99.999 whatever percent is what he has referred to in the past as the March of Nines. The goal is that the vehicle drives so well that the circumstances where it doesn't drive well are extremely rare, which is the same thing that's true for humans. We mostly drive really well, and there are moments when we don't drive well. So if it can get to the point where it drives well more often than we do and drives poorly less often than we do, that's the advance that's needed. Then he got into this, and if you check back on my channel, I did an interview with Omar Kazi where we talked about this 3D video labeling. It's a really good conversation. Omar's way ahead of the game with this. And Elon's going to talk about this later. This whole idea of shifting the way FSD works to 3D video, everything on the neural network working in 3D video, makes it much more efficient, makes it learn faster, makes it easier to learn faster. All of these things come together, and all of these things are happening, and that's why the learning is accelerating. And what's already good is going to be a lot better fast and continuing to learn faster and faster.
Dojo is a sort of training supercomputer. We believe it'll be, we think it may be the best neural net training computer in the world by possibly an order of magnitude. So it is a whole thing in and of itself.
An order of magnitude is a way of saying it's 10 times faster than anything else out there. That's what an order of this is stunning what Dojo is going to be. And Dojo comes into play later. Dojo isn't even necessary to achieve the level of full self-driving that they're hoping to achieve to get it released. But it helps in that March of Nines to get it to where it's much better, much better, much better than human. That's what's coming.
And this is something we could offer potentially as a service. So if others need neural net training, we're not trying to keep it to ourselves. So I think Dojo could be a whole line of business in and of itself. And then, of course, for training vast amounts of video data and getting the reliability from, say, 100% to 200% better than average human to 2,000% better than average human. Those will be very helpful in that regard.
Huge detail there that was unexpected by pretty much anybody I know of is the idea that Dojo, this supercomputer for training neural networks, which is a huge thing that Kathy Wood talks about in the most recent ARK Invest Big Ideas, which just came out a day or two ago. Training neural networks is a huge thing in disrupting the way computers work and computer programming works and everything, the way computers interact with the world. He's talking about having Dojo as a service others can use. It's almost like Amazon Web Services, like cloud computing for neural network training. And that could be a monster business in and of itself. I have no idea how to determine how much revenue that might be, how profitable that might be. It sounds like it's like any revenue is all margin, it's all profit. Whatever revenue it earns is going to be basically all profit. So if that's a business they're able to get into, that's going to be like, just add that on to whatever else happens. I have no idea how big that could be. And if you look at Kathy Wood's, this big ideas thing they just did, it could be it could be billions, tens of billions, or hundreds of billions. I'm not even sure. Stunning revelation. Didn't get a lot of talk. Won't be a lot of talk in the media, but that's a really big detail for future evaluation of Tesla. Just hard to get a grip on how much that's worth right now.
What is Tesla's current gigawatt-hour run rate of the 4680 cell production? How do you see this run rate evolving by mid-2021 or end of 2021?
I mean, essentially, what we're saying is that the number to think about, to focus on, is like we've got 100 gigawatt-hour total Tesla cells produced in 2022. It's not that important to look at the run-up to there, because these things tend to improve exponentially. But we are installing capacity for in 2022 for 200 gigawatt hours a year, and we think probably we should be able to achieve 50% of targeted design capacity in 2022.
That was monster. That was absolutely monster. They expect to produce 100 gigawatt hours in the year 2022. They expect to have, by the end of 2022, 200 gigawatt hours of production capacity in place for these high nickel cells. 200 gigawatt hours of cells. And so that means in 2023, they'll still be growing. If they produce 100 gigawatt hours of batteries in 2022, it seems likely they're going to produce at least 200 gigawatt hours of batteries in 2023, which is 100% growth. And it may be more than that. So this is stunning growth. And as will be discussed later, that's not including batteries they buy from suppliers, from CATL, from Panasonic, and from LG Chem. So massive amount of battery production. 100 gigawatt hours of batteries is enough for 2 million 50 kilowatt hour packs. If you were going to make 2 million Model 3s and Model Ys using 50 kilowatt hour packs, I think they're going to have larger packs than that, but just to oversimplify, just on Tesla's own production of batteries, leaving out other production, they could produce 2 million vehicles just on that. That doesn't include the vehicles made in China using LFP, lithium iron phosphate batteries. That doesn't include vehicles made with the lines from Panasonic, nickel, cobalt, aluminum, whatever other vehicles are making. Just their own batteries would lead to 2 million vehicles. I think we're probably talking about more like 1.2 to 1.5, depending on the size of the battery packs they're going to put in the vehicles. But that means in 2022, which is, not far away, we're probably looking at somewhere between 1.5 and 2 million vehicles or more produced by Tesla, which is absolutely stunning numbers. Absolutely stunning numbers. And that doesn't include grid storage. That doesn't include solar. This is monster. The amount of revenue generated, if you just said 2 million vehicles, if the average vehicle price was $40,000, I believe at Tesla's average price for Model 3 and Y is $50,000, but let's say it's $40,000. That's $80 billion in revenue for 2022 just from cars produced with Tesla's own batteries. It might be 100 billion. And then you add in the vehicles produced in China with CATL's LFP, all the other vehicles Tesla produces. And then you add in solar, and then you add in grid storage. And you are talking about way over 100 billion in revenue in 2022, when 2020's revenue was around 35 billion. This is stunning growth. So Tesla's valuation just for 2022, if they did $100 billion in revenue in 2022, that alone would justify the valuation without all the other stuff they produce. This is absolutely mind-boggling how much valuation we're talking about here.
What is Tesla doing to improve service experience? Tesla had a reputation for outstanding customer service. Now it's impossible to even call a service center, and appointments are scheduled weeks out. Jerome?
So I was kind of annoyed by this because I don't agree with the premise of the question that Tesla supposedly has a terrible reputation for service. That's like a Tesla Q nonsense thing. They didn't directly refute what the question implied, but their answers, if you listen to the answer carefully, it sounds like, well, actually our service has gotten a lot better.
Well, for us, best service, no service. So we spend a lot of effort trying to improve the quality and the reliability of our cars. In the last 2 years, the frequency of service visits are reduced by 1/3. So customers have to come less frequently in service, which is really the goal, no service. And if service has to take place, we're trying to make it as painless as possible. One big effort there is to increase mobile service, which is now more than 40% of all visits in North America. We're trying to push that to 50% this year. 50% of service visits last less than 2 hours. So we're trying to service the cars very quickly so people can get their vehicles back on the road. And in terms of service appointment, it continues to improve. We have actually 140 service centers right now in North America. For 100 out of those 140, you can get appointments in less than 10 days. And we're going to make sure it's all service centers have a short wait time. We're accelerating, as Zach mentioned earlier, the pace of opening. In North America, we opened 11 centers in December, and we have plans to open 46 in the first half of this year. So that's what we're doing to improve service. In terms of phones, our emphasis is on the app. Really, we want all communications to go through the app, the Tesla app, and we're trying to move away from the phone. The app is much better than the phone. It can spot alerts directly from the car and schedule a service appointment. There is a written record of all communication between the customer and the service team. You can have pictures in there. You can take care of your payment without entering the credit card and doing all that stuff. You get updates on the service. And there's even more features that are going to come in the coming months on the app, and I think everybody will be happy, including the ability to spot where your service technician is and how far it is to coming from your car and what's going on there. So we are investing everything on the app, I think just like most other companies as well, and that's the way of the future.
Couple key details. Massive growth in the number of service centers. They added 10, I think he said, in either the last quarter or the last month, and they're expecting to add 46 more service centers in the first half of 2021. So the number of service centers is growing rapidly, and they are shifting. It was kind of an interesting point here that, sort of a lot of people are used to calling for help, and they're trying to push people into using the app. Everybody who has a Tesla has an app on their phone for operating their Tesla, for interacting with their Tesla, and they're trying to make it easier to get service done through the app on the phone rather than making phone calls. And one of the advantages of that, really for both sides, is all the communications are documented. So if somebody, when you have a phone call, somebody can complain, they told me this, and you have no record of it. Here, everything that happens there's a record of it. And to some extent, the vehicle can communicate with the service center through the app as well. I don't fully understand how that works, but if the vehicle needs service, the vehicle knows it has a problem. It can basically say, hey, we need service. That's the value of having a smart vehicle.
Now let's go to institutional investor questions. The question number one, what are the key milestones we need to achieve in order to evolve current FSD to a commercial level 4, level 5 ride-sharing solution?
We need to transition all of the neural nets in the car to video. And in order to do that, the whole stack has to be, stack has to be changed to video. So that means gathering video clips, then using, and this is actually surround video. So you've got 8 cameras operating simultaneously with synchronized frame rates. So you've got basically 8 frames surround video, 8 cameras surround video, and then you've got to label basically everything in that video snippet, and then train against that, and have those neural nets operate the car. And this is coming from the past where we would label the neural nets would be a single camera, single frame. So no video, and not combining the cameras. And then we went from single frame, one frame at a time, one camera at a time neural nets to surround camera neural nets, where it would look at all images from all 8 cameras, but only one frame at a time. And now to where we include the time dimension, and that's video. Really just see this as a question of getting the work done. We're getting it done, and you can see the results in the rapidly improving FSD betas that are released. And we're also going to be expanding the FSD beta itself to include more and more people. And from my standpoint, it looks like a very clear and obvious path towards a vehicle that will drive, 100% safer than a person. Yeah, I really don't see any obstacles here.
Kind of rehashed the question, kind of asked something that had already been addressed, but Elon went in a little bit more depth about how the training is going to work, changing the software from what used to be people would be looking, and the software would be looking at one picture at a time from each of the 8 cameras, to putting all of the cameras together and creating essentially a 360-degree video that you and I would not be able to even comprehend, because we don't see in 360 degrees. And not just an instant in 360 degrees, but a video snippet in 360 degrees, and have the entire software stack, the whole system operate in that way, that will enable faster learning, faster training, getting the software to improve that much faster. And there's this bit, again, Omar talked about this, of labeling, where there are humans in the process for now who are looking at these pictures and saying, this is a tree, this is a cat, whatever labeling needs to be done to identify objects. And instead of labeling on 8 different pictures in one moment in time, they're able to look at a 3D video and see an object and label that object one time, making it much, much more efficient for the human labelers. That instead of having to look at 8 pictures and 8 pictures from 8 cameras, multiple pictures, 24 frames, let's say, they look at a video moment and they pick out an object in the video and say, that's whatever object it is. That's a stop sign, that's a red light, whatever the software needs to learn to identify. And a second level is that the software learns to label things itself, and I did not get how it would do that. I'm not sure how, and I've looked at a lot of details about full self-driving, patents that they've sought and everything. I don't understand yet how the software does its own labeling without humans. That's going to be an interesting thing. I think we're going to learn at some point later in the year. Elon talked about an AI day that might happen later this year. Maybe it'll become clear then. Me, that's kind of like, well, how would it do that? And I don't know yet.
Does Tesla plan or expect to license any of its software applications, FSD, and AutoBidder in particular, to third-party OEMs?
I think we're very open to licensing our software to third parties. And we've had some preliminary discussions about licensing Autopilot to other OEMs. So this is something we're more than happy to do. But I think obviously we need to probably do a little bit more work to prove that Tesla Autopilot is capable of full self-driving, which I think will become obvious later this year. And then we're more than happy to license that to other car companies. We're definitely not trying to keep it to be a Tesla exclusive situation. And I think that probably the same goes for Autobidder. We haven't thought as much about Autobidder, but the Tesla philosophy is definitely not to create walled gardens. We're going to allow other companies to use our supercharger networks, using our autonomy software and Autobidder and perhaps other things would be fine too.
So this is an interesting point here. I've heard this question asked before. I think ideally Tesla would like to share full self-driving software. Autobidder software, by the way, for those who don't know, is software that Tesla Energy uses with grid storage devices, particularly Megapack, sharing power with the grid. And I believe it uses some kind of arbitraging software to figure out when to sell power to the grid versus when to not sell power to the grid to get optimal pricing to make the most money possible from its participation in the grid while supporting the grid when it needs to be supported. And with FSD, this is a tricky one because it would seem to me they would make the most money if they hold FSD for itself and have the walled garden. But at the same time, it depends. If other companies are going to pay Tesla to license FSD, or if Tesla is going to make revenue in some way from FSD operating on another car. For example, somebody else has a car that's used as a robotaxi and Tesla gets a slice of that revenue, then yeah, that might make sense. I suspect that it will be difficult for other car companies to agree with Tesla on the terms of licensing, and it really hasn't been revealed yet what Tesla has in mind for how the licensing would work, how Tesla would be compensated for licensing that software. I think one of the goals that Tesla has is, one of the things that frequent concerns I hear is that Tesla will be perceived as a monopoly and then they'll get regulated by governments. And if they share software and they share things and they enable other companies to stay in the game, it's less likely that Tesla will be viewed as a monopoly and less likely that they will be overregulated and broken up by governments. So I'm guessing that's part of it. And part of it is just, hey, we want to accelerate the transition to sustainable energy. We want to make these vehicles more efficient. I think another problem there is in terms of licensing FSD to other companies, they would need to have the hardware, the 8 cameras, the radars, the sonars, which I don't know that any other company has at this point. So that's another hurdle, is the companies would have to add the right equipment in order to make it work.
Key differences in product customer preferences, FSD strategy between China and the rest of the world. Do we need to do things differently to win the Chinese EV market?
Well, we currently are we are currently the leader in the Chinese EV market. I think we must be doing something right if we're the best-selling electric car in China. That said, very few of our customers in China, I think it may be as low as 1 or 2%, actually have selected the FSD option. This is much lower than the rest of the world. We definitely need to make it work well in China. I think as soon as it works well in China, then we will have a big break for FSD. The customers in China, Tesla owners in China, are among the most discerning in the world. Their attention to detail is incredible. I'm confident that they will buy FSD as soon as it is working well in China.
So that was a striking number to me, that I think in the United States, I don't know whether it was 25, I think it might be 25% of Tesla buyers in the United States choose FSD. In China, it's only 1 or 2%. So it is not yet something that is attracting the attention of Chinese drivers. For whatever reason, they either don't value FSD as much, or it's not that good in China yet. And Elon is hoping they can make it attractive enough that people in China who are buying Teslas will decide they want to get FSD and spend the money that it will cost.
Is it fair to argue that the best way to think about companies' long-term earnings power is tied to profit per unit of battery capacity? 3 terawatt-hours target from battery day implies half of long-term battery capacity goes to storage, depending on what you assume for pack size on Elon's 20 million vehicle unit goal.
Now notice the question asked about profit per kilowatt-hour, gigawatt-hour of battery capacity. That sounds like the battery revenue model I've been talking about. Listen to what Elon talks about something else first. Listen to what he says.
It is. So the fundamental limit on electric vehicles right now, in general, is availability of cells, what's the output of battery cells in gigawatt hours, and you can't grow faster than that. Now, at Tesla, we've improved the efficiency of our cars dramatically such that you can actually get pretty good range even with the standard range battery pack. It's in the high, it's approaching, for Model 3, it's approaching the sort of high 200s, and with some slight continued improvements, we'll start to get to 300-mile range, even with a standard pack, and on order of 500 kilometers. So there's efficiency improvements in the car, but fundamentally the growth is dependent on cell production, and there's also a lot of other companies that have a need for cells. So, but the reason Tesla is doing its own cell production is in order to accelerate the growth. It is not to make less use of our cell suppliers. In fact, I want to be really clear. Tesla wants to increase purchases from cell suppliers, and we've been very clear with our cell suppliers, whether it be CATL or Panasonic or LG, that we will take as many batteries as they can produce. So, and we urge them to increase their production, and we will buy as much as they can send to us. Obviously, there's some price limits on that because the car still needs to be affordable. But I'm just trying to be as clear as possible that our goal with making our own cells is not to disintermediate our suppliers. It is to supplement our suppliers. And we want our suppliers of cells to increase their production and, in addition, have our own production that is simply taking up the amount beyond which they are either unable or unwilling to increase their production.
This is a part of my battery revenue model. When you see Tesla talking about making a certain amount of batteries and you're trying to figure out how does the number of batteries translate to revenue, you can't just count the batteries that Tesla makes. Tesla will continue to buy batteries from suppliers. And the way Elon said it, Tesla's production is meant to supplement what the suppliers give them. So really, the way I've done it is an equal number for Tesla's battery production and supplier production, which would be 100 gigawatt hours in 2022 from Tesla and 100 gigawatt hours from suppliers. When he says Tesla's production would supplement supplier production, it sounds like he's expecting the suppliers to provide more than 100 gigawatt hours of batteries in 2022. And hopefully every year going forward, Tesla produces a certain amount of batteries and the suppliers supply more than what Tesla produces. So in 2030, when Tesla produces 3 terawatt hours of batteries, they will get more than 3 terawatt hours from suppliers. My models assume an equal number. So I don't know whether he meant it that way, but I believe for 2022, 100 gigawatt hours from suppliers is probably a low number. Just Panasonic alone is probably going to be 35 gigawatt hours. CATL is producing a huge volume in China for the LFP and everything. So it seems very likely to me that when I predict in my 2022 model, I say 200 gigawatt hours total, I think it's likely I am understating the number of batteries that will be produced, and that means I'm understating the revenue that will result from that. But Elon talks more about this.
And so probably since the cell output drives vehicle output, probably the broad brushstroke value of Tesla is just what's the cell output, that implies vehicle output, and then at least double that for the autonomy revenue, probably more than double, and that's how you figure out the value of the company, I think, long term.
This is pretty much dead on my battery revenue model, but it's Elon still going battery revenue plus. My battery revenue model assumes 0 FSD Robotaxi revenue. Elon is saying, take Warren's battery revenue model. He's not mentioning my name, of course, but Elon is saying, take the battery revenue model and double it. My battery revenue model takes Tesla's valuation in 2030 to $40 trillion, $40,000 a share. He's talking about doubling that. That's like $80 trillion, $80,000 a share. I suspect he's got something else in mind, and it's not quite that insane. But my $40 trillion, $40,000, my $40 trillion market cap, $40,000 a share number no longer looks crazy. Now it looks like I'm understating what Elon is thinking.
Where are you in Cybertruck development? What are your expectations for Cybertruck deliveries in 2021?
This, by the way, is a question I had submitted to say.com. I said, is there still hope of delivering Cybertrucks in 2021? They didn't answer my question, but fortunately an institutional investor asked roughly the same question. I think their question was better than the way I worded mine. So here we go.
Right, so we finished almost all of the Cybertruck engineering. So we're no longer iterating at the design center level or design level. We've got the design fixed. We're getting to, to an order of the equipment necessary to make the Cybertruck work. We're actually going to be using even bigger casting machines for the rear body of the Cybertruck because you've got obviously a bigger vehicle and you've got a long truck bed that's going to support a lot of load. So we'll be using an 8,000-ton casting press for the rear body casting as opposed to a 6,000-ton for Model Y.
So this is big news. My impression of the design for Cybertruck was, and I have videos where I talk about Cybertruck, was the exoskeleton steel exterior was the structure of the vehicle and structural battery pack underneath. Elon is talking about an additional piece that is die cast that will be under the back of the vehicle as part of the structure. This increases the likely weight of Cybertruck beyond my estimates. So there's something I got wrong. I got to own up to where I'm wrong. And it's kind of exciting that this is going to be... Cybertruck is a much larger vehicle than Model Y, so this piece is obviously larger than the piece in Model Y. This reduces the amount of space. One of my ideas behind Cybertruck was that because it's such a big vehicle, there's room for more batteries. And this casting piece, I believe, is going to take space up that might have been used for batteries. But this is design. This is the way it works. I'm sure it needs to be this way. So my earlier forecasts of Cybertruck weight are probably low. And it will be interesting to see how this develops.
I think it's going to be an incredible vehicle. If we get lucky, we'll be able to do a few deliveries towards the end of this year. But I expect volume production to be in 2022.
If we get lucky, there will be a few deliveries in 2021. So it seems like they've pushed back the timetable for Cybertruck. Now, you never know whether they're sandbagging. We haven't seen any indication of the beginnings of a Cybertruck factory, which I believe is supposed to be in Austin, Texas. We have seen the beginnings of semi-production. Semi. People mock me how I say it. Whichever way I say it, people say I should say it the other way. But we have seen that they're hiring manufacturing engineers for the truck, the semi-truck or the semi-truck. We have yet to see any hiring for manufacturing engineers for Cybertruck, so that's going to be after semi or semi. But they are expecting volume production of Cybertruck in 2022. I ordered Cybertruck in the first hour of the reveal, so I hope to be one of the first people to get Cybertruck. It now looks like I won't get my Cybertruck until early 2022 rather than late 2021, unless they're sandbagging.
Thanks so much, guys. Could you talk a little bit about the regulatory environment for FSD and how you're seeing that play out?
Just really quick, I was really impressed with the questions from institutional investors and analysts. I think they asked, usually I think the retail investors ask better questions than institutional investors and analysts. This time I think the institutional investors and analysts actually asked better questions than retail investors. And I thought this was a very good question. A lot of people raise this when I talk about FSD. What's the regulatory environment like? How likely is this to be approved by regulators? So listen to the answer.
You know, what we're seeing right now in the U.S., for example, is a pretty dynamic space, but it's overall not particularly limiting on a rule basis. But what we're going to expect is to have to work with regulators to demonstrate really, really high reliability, as Elon said before. The rest of the world's fairly dynamic. In Europe, we see a general slowdown, generally not reaching past level 3 right now, with some impetus to start working on new working groups to reach past that. And China's showed an interest in working on level 4 or even level 5 later this year. So we expect a pretty dynamic 2021 in the regulatory space, with leadership in the US looking for manufacturers to demonstrate really good launches and really high reliability before releasing to wider and wider groups.
This is pretty consistent with what I've been saying, that Europe is probably going to lag. I think continental Europe is going to lag. I think there's better signs that the UK will be more advanced on FSD, but Europe in general is going to slow down and limit FSD and Robotaxi. My view is certain jurisdictions in the United States will be very favorable. Florida has very favorable laws for full self-driving for Robotaxis, even to the point of prohibiting local governments from regulating or taxing Robotaxis and self-driving cars and Robotaxi networks. And I also had predicted this, and it sounds like they're consistent with this, that China is more optimistic, a more favorable environment for full self-driving for Robotaxi going live. So that was a very positive. So, keep in mind, China's a huge market. The United States is a huge market. Some states in the United States will be more difficult than others, but Florida is a huge market. Texas is probably going to be favorable. California is probably going to be favorable. So I think those are three of the biggest states. And Tesla is big in California and big in Florida. So it seems likely that we're going to see some rollout of full self-driving for Tesla in California, Texas. He referred to level 4, level 5. Tesla doesn't really talk in those terms, but that stuff really looks like it's going to be happening in 2021, late 2021, if not sooner, and should get big in 2022.
First on 21, any expectations for what we should see on regulatory credit sales? And then the second question is on capital. Obviously, you raised a lot of capital in 2020. What should we think about for use of those funds beyond just covering some of the maturities? And can you just give us a sense of what the elevated liquidity does and doesn't buy? Meaning, to what extent does elevated capital enable you to accelerate plans on building capacity or expanding vertical integration, accelerating timing on full self-drive features? So those are the questions. Thank you.
So the first part of the question I think is kind of dumb, and I think Tesla's been clear about this. We don't think regulatory credits are an important part of the business going forward. Zach gives a pretty good answer. It's kind of like we don't really know. It's hard to predict. You'll hear that in a minute. The second part of the question about how they're going to use this increased capital, Tesla did capital raises and has a huge cash pile now. Plus, they have free cash flow, so they have more cash. So I thought that was a pretty good question. I thought Zach's answer was really, really good. So take a listen.
Sure. On the regulatory credit sales side, this isn't always an area that's extremely difficult for us to forecast. 2020 regulatory credit sales ended up being higher than our expectations. And it's difficult to give guidance on that. I mean, what I've said before is that in the long term, regulatory credit sales will not be a material part of the business, and we don't plan the business around that. It's possible that for a handful of additional quarters, it remains strong. It's also possible that it's not. Most of our regulatory credit revenue from Q4 was not lined up prior to the beginning of the quarter. And these were discrete deals that were struck over the course of the quarter. So I wish I could give you more on this, Dan, but it's a space that's extraordinarily difficult for us to forecast.
I thought that was a really key point, though, that people have this impression that Tesla has these long-term deals for regulatory credits, and that's what I thought. I thought they had some long-term deal with Fiat Chrysler, whoever it is, for like $2 billion or something like that. And it turns out, no, that's not how the regulatory credits work. It's a lot of short-term deals that happen over the course of a quarter. Somebody comes, says, hey, we need regulatory credits, and Tesla sells them. It's not some steady flow. I do think they have said in the past they thought regulatory credits would grow. He didn't really say that this time, so it's not clear. But, he said what I've felt all along. I don't use it in my modeling. Regulatory credits are not an important part of the business going forward. Producing high-quality vehicles, selling them for money, getting FSD working, getting solar, etc., grid storage, that's where the business is. They don't plan the business around regulatory credits. It's one of the things that Tesla Q likes to talk about is, oh, their profits are inflated because of regulatory credits. Who cares? I don't look at regulatory credits when I predict where Tesla's going. They don't look at regulatory credits when they look at where they're trying to go. This is like a trivial detail that people focus on that is important if you're looking at this quarter and you're not looking forward. But if you're looking forward, who cares? That's not what the business is about.
On the second side, with respect to capital, a couple of things that we're thinking through there. So, as I mentioned in my opening remarks, debt reduction is an important thing that we're focused on now. Early conversions, these are things we don't have a choice on. We did around $2 billion of that in Q4. We currently have $1.4 billion that we expect to go out in Q1 as a result of early conversions or conversions on convertible debt. That number may increase.
Just to be clear, they're expecting to pay off $1.4 billion in debt in the first quarter of 2021, and that number may increase. So that means there's an expense in the first quarter of 2021, and the first quarter of a year is usually lower revenue because the business is somewhat seasonal. So we may see, I still think it's likely they're going to be profitable in quarter one, but we may see some kind of reduced profitability in quarter one because of retiring this debt. But that's great news for the long term because it reduces expenses in the long term, and that enhances long-term profitability.
We are also using the money with respect to our investments in future capacity. And so what we're able to do now that we haven't had the opportunity to do in the past is, as we're building capacity, particularly in Austin and Berlin, we can build that capacity with the expectation of what the end state of capacity will be, pulling forward some of those investments, rather than incrementally adding capacity as we go along.
That was really important. When they're building out the factories, they're building them out for full capacity right away. Instead of building out some capacity and then building out some capacity later, they're bringing forward the investment. They're making those investments earlier so that the factories can probably ramp. This probably means that the factories will be able to ramp quicker and deliver more vehicles sooner, which is why they're talking about growth going faster than 50% a year.
And so this is an important part in terms of capital efficiency that we haven't had the luxury to do in the past. And it's great to be able to have the liquidity to focus on that.
So not only does it mean they can get it built quicker and get production ramped quicker, it also means that when they're spending the money on this, the money is spent more efficiently. So the capital cost going into production ends up being lower.
And then more broadly, as Jerome was touching on, service expansion is really important to the future strategy of the company. So as you saw in our Q4 numbers, the expansion of service centers and mobile service from Q3 to Q4 increased quite a bit and was also quite a bit higher than the first part of the year. And so we're able now to make investments there and also in the supercharging network to get ahead of future demand, which will cost us more in the near term, but is what the right long-term thing is for our customers and the company.
Another place that the cash pile is going is into building more service centers, building more supercharging stations. And this, I think I mentioned this before, this makes it more attractive to buy a Tesla if you know there's more charging stations around you. It makes it more attractive to buy a Tesla if you know service is going to be available. And it leads to greater customer satisfaction. So people are saying more positive things about their Tesla experience, which makes it easier to sell to the next customer. All great stuff. All signs of faster growth and better growth.
Was wondering, you mentioned how you'd like to increase your purchases of cells from suppliers. Does this require them to also have the capability to build structural 4680 cells of the sort that you're putting in these newer iterations of vehicles?
This was a spectacular question. I love this question, and the answer revealed a lot that we didn't know before.
No, it does not. Although we are talking with them about making the 4680 form factor, but it is not required. For example, the new S currently uses the 18650 form factor, so they're just a more advanced cell, and we think we'll continue to use that form factor for at least a few years.
So I had thought they were shifting rapidly to 4680 cells across the vehicle lineup. And Elon will say that they are gradually going to shift to 4680 cells. And I thought that the Model S and the Model X would be the first vehicles to use the 4680 high nickel cells coming out of Cato Road, the Fremont battery line. Apparently, I was dead wrong. They're continuing to use the 18650 cell, which is the smallest cell that they use. It's 18 millimeters in diameter and 65 millimeters tall. The cells in Model 3 and Model Y have been 2170, a little bit bigger diameter, 21 millimeter diameter, a little bit taller, 70 millimeter height. And the 4680 is a much, much bigger cell. They're not using, so that, and this makes sense. Panasonic has made this huge investment in multiple 18650 lines in the Gigafactory in Nevada. And if you ditched them and went to 4680, that would be scrapping a huge investment that Panasonic and I think Tesla together made to produce 18650 cells. Since they are still useful and they are valuable and they're able to produce more vehicles because they're producing those, they continue to produce the cells they were already making. The question that's not clear and isn't really answered here is, to what extent are suppliers thinking about or starting to make 4680 cells? There have been articles where it appeared that, say, LG Chem was gearing up to make 4680 cells, and Elon didn't talk about how that's going to happen. I still think it is going to happen, but that didn't seem to be a big factor in this. Make whatever cells you can make. Model S and the Model X, which are not high-volume vehicles, they'll continue to use 18650 cells. Probably some of the Model 3s and Model Ys will continue to use 2170 cells. Semi is going to use the 4680 cells. That's very clear. It'll be clear later if it's not clear already. Cybertruck, I'm guessing, will only use 4680 cells, although maybe we're going to find out more about that later. I believe the Berlin Model Y is going to use 4680 cells. That's interesting. It's a totally different architecture. We know Model Y is going to have structural battery pack, and it's going to have 4680 cells, the Berlin Model Y. We're not sure yet about the Texas Model Y, the Giga Texas, Giga Austin Model Y. My guess is that that will also use 4680 cells and structural pack, but they will continue to make 3s and Ys in Fremont. They will continue to make 3s and Ys in Shanghai, and those will probably use 2170 cells. So they're going to have diversity of cells, but they are going to shift over the long haul to the 4680 cells, which will be better. But as long as you're getting value out of the 2170 and 18650 lines, you keep producing them because that's a big investment you don't want to throw away, and they're still producing something valuable. More cells is better.
But we will, over time, be retiring the form factors and trying to move to a consistent form factor. But it is not a requirement that we place upon our suppliers because it would just result in fewer cells. So it's better for us to deal with the complexity of different cell form factors than insist on a single form factor for our suppliers today. Like I said, over time, it will make sense to have a consistent form factor.
So I think an example of that is the Tesla Compact for 2023. That will likely use 4680 cells, structural battery pack, everything. That's why I think Cybertruck will use 4680 cells. Model Y Berlin, Model Y Austin are going to be effectively new vehicles, so they will use 4680 cells. But the existing vehicle production using existing lines, why wouldn't you continue using the cells that they're making? I think what was unanswered is, are the other suppliers going to start making 4680 cells when we've seen reports that they are. And I wish that was answered. It wasn't really answered. He's saying it's not required. They don't have to, but obviously they're going to want them to make 4680 cells, I think. I'm not sure where he's going with that. That's a puzzle. I'm kind of puzzled. I'm kind of wondering about where does that go? Why would you build a new cell line in 2170 or 18650? It seems to me you will continue using the existing cell lines that you already have. But I would just think any new cell line you would build it with 4680 cells. There may be some point, well, we're continuing to expand production in Shanghai of Model Y, so they're going to need more cells produced for Model Y in the 2170 format. You wouldn't think they would make any new 18650 lines. That wouldn't make sense because they only go in S and X, and those are low-volume vehicles. I think the 18650s may go into some power walls or grid storage, so there may be other uses for them. But long haul, you would just think everything would be, any new lines, it would make sense to only make 4680 cells and working with suppliers. So we'll see where that goes.
And one additional, maybe qualitative question on capacity expansion. You've mentioned in the past, access to dollars is one thing, but access to human beings that are sufficiently qualified is another. Have you run up against any issues on that front that would potentially limit your growth in any way?
This was, I thought, a really good question, because if you go back to the Third Row Tesla podcast, Elon talked about there being a shortage of good engineers, and that was something that was limiting Tesla's ability to grow. So the answer here surprised me a little bit.
That is one of the things that limits growth or limits the growth rate. It doesn't limit the ultimate size, it limits the growth rate, which is what's the rate at which we can onboard great people and get them trained in the right areas. You certainly can't instantaneously. If you've got a factory that has 20,000 employees, you can't just hire 20,000 people instantly. They're usually doing something else, so they've got to transition from whatever they were doing or move from some other part of the country, and so there's a certain amount of time required for that. I mean, that said, we do think that we can maintain a growth rate in excess of 50% per year for many years to come. I think this year we may track to a fair bit above 50%, but we don't want to commit to that, but at least that's what it would appear. And the same again next year. It appears to be meaningfully above 50%.
So in a sense, hiring good employees does limit the growth rate, but it sounds like it's not limiting it a lot. And I think the key detail here is when Elon said that in the Third Row Tesla podcast, he was talking about engineers. And I think it may be easier to hire factory workers. And then one of the hurdles is, like he's talked about this before, in Germany, there are rules about when employees are leaving one company to go to another, that there has to be this, I think they call them garden employees. There's this period of time where they can't work for you. So you want to hire somebody, you can't bring them on right away. And if somebody's coming from another part of the country and say the US, the difficulty of relocating people, there's certain things that slow it down, but it sounds like it's not a huge limit on growth. And then I thought this was a bombshell. Elon said they're expecting at least 50% growth for many years to come. And a fair bit above 50% for 2021 and 2022. We're talking about a very rapid growth rate for a company that is already highly competitive and making a huge dent in everything. I don't know how big a fair bit above 50% is, but it's a lot. But even going out 3, 4, 5, 6 years, they're still expecting more than 50% growth. My models, some of them might go more than this, but my models typically assume 50% growth a year. Some of my models, the model I've been working on right now, assumes slightly higher growth. And now I feel comfortable I can move to that 60% growth rate for several years going forward. And that just really boosts the share price. The potential for, to get to 20 million vehicles, which he has talked about 20 million vehicles in 2030. If you maintain a more than 50% growth rate for several years, they're going to get to 20 million vehicles well before 2030. This is the numbers start to get really insane when you look at what that translates to. When you talk about revenue, when you talk about market cap, when you talk about share price, the growth rates he's talking about are staggering in terms of what that means for the company and what that means for our future, what it means for accelerating the transition to sustainable energy. Spectacular stuff.
Elon, back in 2018, you tweeted about electric vans and how it could be interesting to work with Daimler and Sprinter. We haven't really heard of anything since, but in the meantime, we've seen a lot of activity in that electric van and last mile space from a number of established players and startups. So I know you said that you have a lot of projects on the table, but can you provide us an updated of your thoughts on this market, and is it something you're interested in?
Again, this is another great question. I love this question. For those who follow my channel, I made a video where I talked about Cybervan. Elon has talked about a Tesla minibus in the past. I think those might actually be the same vehicle. Check my channel, search my channel for Cybervan, you'll find it. That could be a revolutionary vehicle in a lot of ways. And Elon's answer, once he said it, it wasn't surprising, but listen to his answer. This is brilliant stuff. It makes perfect sense.
I think Tesla is definitely going to make an electric van at some point. The thing to bear in mind is that there is fundamentally a constraint on battery cell output. If one is not involved in manufacturing, it's really hard to appreciate just how hard it is to scale production. It's the hardest thing in the world. Prototypes are easy. scaling production is very hard. The main reason we have not accelerated new products is, like for example, the Tesla Semi, is that we simply don't have enough sales for it. Like if we were to make the Semi.
Notice he says semi, not semi, semis. I'm going with semi from here on out.
Like right now, which we could easily go into production with the Semi, but we would not have enough sales for it right now. We will have enough sales for the Semi when we are producing the Tesla 4680 in volume. But for example, Semi would use typically 5 times the number of cells that a car would use.
That surprised me. If Semi is using 5 times the number of cells that a car would use, if you assume, I'm not sure what car he's talking about, because if you're talking about a 75 kilowatt hour pack in, let's say, a Model Y, that's less, I think, than 400 kilowatt hours in Semi, and I thought Semi was going to have a lot more than that. Even if you talk about a 100 kilowatt hour pack or 120 kilowatt hour pack in, say, Model S or Model X, you're only at 500 or 600 kilowatt hours. I thought Semi was going to go to a megawatt hour. So this means that Semi is a lot more efficient in its battery usage than anyone has talked about. I thought they were talking about a megawatt hour for the long range Semi, the 500 mile range Semi, and a 600 kilowatt hour pack in the 300 mile range Semi. It sounds like they may be getting 500 mile range out of 400 or 500 kilowatt hour pack. This is really, really stunning. It's a small detail that a lot of people aren't paying attention to, but I think this is a really, really big deal for the future of Semi. Because if you get more out of your cells and you're able to keep the weight down because the 4680 is efficient, that makes cargo more competitive, which is something they talk about later.
But it would not sell for 5 times what a car would sell for. So it kind of would not make sense for us to do the Semi right now, but it will absolutely make sense for us to do it as soon as we can address the cell production constraint. The same would go for a van.
So that's another important detail that I've noticed this before in my battery revenue model. Semi uses a lot of batteries, but doesn't. So it uses, let's say, 5 times as many batteries, but it only costs twice as much or 3 times as much. So Semi is not a great vehicle for long-term revenue and profitability of the company unless there's some other profit stream I'm not seeing. I think they just want to build it. It's an important vehicle for reducing pollution, making a positive impact on society. But really, if Tesla was focused on accelerating the transition to sustainable energy outside of that and making money outside of that, if Tesla was solely focused on making money, it wouldn't make sense to make Semi yet. So this is really a sign of their commitment, because diesel semis put out a lot of pollution, a lot of bad pollution that pollutes the air in a bad way. It hurts people's lungs, etc. So if they can get those off the road, they're making a bigger impact on human health and the climate and everything else.
2 years ago at the Autonomy Day, you stated that you're working on the next gen Tesla chip, which was about 2 years away. So is there any update on that front?
And this might be my favorite question of the entire call, because I was working on a video about the next generation chip, and this basically short-circuited my video. I'm not even going to make the video anymore. But hear what he has to say. This is brilliant stuff.
Yeah, I mean, to be clear, we're still not, the software still does not fully use the capabilities of the FSD version 1 computer. It is really just an incredibly powerful computer, and I'm personally certain that you can achieve full self-driving with a safe level far in excess of the person just using the full self-driving version 1 computer. The version 2 we expect to be about 3 times as powerful, and this would need to be paired with higher resolution cameras, so it's quite it requires a bunch of things to change simultaneously. But we have not been rushing the version 2 of the chip. It's coming along well. It's in good shape, but since we can achieve FSD full self-driving with the current system, it would actually be a distraction right now if we were to introduce the full self-driving, the Tesla FSD chip 2. It would set us back quite a bit on software, and software is the critical path to full self-driving. So I wouldn't worry too much about that. That's an improvement, but not a game changer. The FSD2, getting the software to work and getting all the neural nets to be video. That's the game changer.
So that was, to me, that was amazing. It was my impression that, and first of all, he's changed the version numbers. When they originally came out with the current generation of FSD chip, they referred to it as FSD version 3, that the prior version was FSD 2.5. And now it appears he's calling the current generation chip version 1 and the next generation chip version 2. Not sure why that changed or how that changed or whatever, but and I know that in the past he's talked about the FSD, what we'll call now the version 2 chip, was what it was going to use integer 8 processing instruction set. He has said this before. They have said this before. Karpathy, I think, said this before as well. The FSD, the current generation FSD chip is so powerful that it is able to do everything that they need. It's doing great. It doesn't need a newer chip. So what he described about the next generation chip, it sounds like now that chip is going to be a down the road thing. I suspect it won't be in Cybertruck. It won't be in any vehicle in 2021. It may not be in any vehicle in 2022. But the 2023 Tesla Compact that was revealed at Battery Day, it's likely they're targeting it for that. And then another detail he mentioned, basically that chip is so powerful that the only way you're going to use everything in it is to use higher definition cameras, to have more input coming in. The video streams that are coming in from the existing cameras are, the chip is good enough to handle 8 streams coming in, which I think is already some degree of high definition. At high frame rates, the new chip will be able to handle even higher definition cameras, perhaps at higher frame rates, and it will improve things. It will take the vehicle from 10 times safer than human to 100 times safer than human, perhaps, but just getting to 10 times safer than human is already huge. And he talked about 2,000% increase with Dojo combined with the FSD3 chip. So we're looking at achieving radically safer vehicles end of 2021, sometime in 2022. And then the FSD version 2 chip is really just gravy. It's going to make it better. It's going to save more lives, but it's like it's going to be so much better already before you get to that. And I thought maybe it would be power savings and that would help extend range, although I think the current chipset actually doesn't use that much power anyway. I was wrong about that. The next generation FSD chip is not coming out in 2021. That's another mistake I made. And I got to accept when I'm wrong about something.
My first question is about your in-house cell manufacturing efforts. So in addition to building up capacity, some of the goals you highlighted was to cut the pricing or the cost by about 50%, boost the range by about 50% over a number of years. So wanted to know if your initial efforts are trending in that direction. What is sort of like the timeline to achieve these goals? And maybe related to this, how are you thinking about the timeline for the cheaper Tesla, the entry model, potentially?
So another good question. I think this is a little bit repetitive because there were already a couple questions about the 4680 cells. But I still thought, it's great that the analysts have caught on that the 4680 cell is important and that the development of battery technology is important. This is something I feel like analysts didn't get before. And after Battery Day, it seems like they must have paid attention. They are getting it. But let's hear what Elon and Drew have to say.
I think we feel very confident about achieving those targets, let's say, over a 3-year time frame. I don't know, Drew. It's not like year one. So maybe 4 years. Give ourselves a little room. But for 3 or 4 years, I'd say, yeah.
We put together the trajectory, in the Battery Day, and we're on that trajectory still. I think that's probably the best reference for the cost trajectory that we are on.
Yeah, we're aspiring to do better than what was presented at Battery Day, but we're confident of at least doing what we presented at Battery Day.
I think that was something that I didn't expect was the timeline that Elon is saying that they expect to achieve the full cost reduction they talked about Battery Day in 3 to 4 years. I thought it was a longer process than that. They're talking about getting the cost of the high nickel cells down to $55 or $60 per kilowatt hour by 2024 or 2023. This is stunning for what this does for the cost of vehicles, what it enables for their cost of producing vehicles. And that leads to either you're able to lower the price of vehicles and sell a lot more, or it means monster profits because your cost of producing the vehicles is a lot lower, and yet you're still getting high revenue for the vehicles you produce. So this is, fantastic news. For me, my own personal take on this, the really important thing that Tesla needs to achieve is lowering the cost of batteries and thus lowering the other things about the cost of vehicle production, making the vehicles more affordable so they can sell, so more people can afford to buy them, and that increases the volume of sales, and that increases revenue and everything else. But also the impact on range that they're expecting to increase. That means they expect to increase the energy density of the cells. And Elon has said this before, that he thinks in 3 to 4 years they're going to get to 400 watt hours per kilogram on the 4680 cell, which translates to much longer range on your vehicles, or needing to use less cells in your vehicle in order to achieve the range you were trying to achieve. Because if you lower the weight, you get more range with the same amount of battery, or you're able to achieve the same range with less battery, which means you can make more vehicles. So this is really spectacular to hear it. It fleshed out a little bit more here. I love the way this went.
Going back 10 years, you talked about when you had a mass market car on the road that you would step down as CEO and be a chief architect. And then we have, you go into Hawaii to see Larry, and the X.com, and I'm trying to put it all together. So there's a lot of questions there.
Wow, that was from left field. Hey Elon, are you going to retire as CEO soon? I did not see that question coming, and it was sort of this vague question. He brings in X.com. He brings in Elon's trip to Hawaii to talk to Larry Ellison, as if that had something to do with Elon continuing as CEO, or X.com, or who knows? Who knows what they talked about in Hawaii? But that was just like question from left field, and I love the answer.
Thank you. Sure. I expect to be CEO of Tesla for several years. I think there's still a lot that I'm super excited about doing, and I think it would be hard to leave a lot of these great projects halfway or partway done. So I do expect to be running a company for several years into the future. Now, obviously, nobody is or should be CEO forever. So I don't expect to be. The sheer amount of work required to be CEO of Tesla is insane. I think I do probably more. Well, I definitely do more technical work than is typical for a CEO. So it would be nice to have a bit more free time on my hands, as opposed to just working day and night from when I wake up to when I go to sleep 7 days a week. It's pretty intense. But I think the mission isn't over yet, and we've still got a long way to go before we can really make a dent in the world on accelerating the advent of sustainable energy. The goal of Tesla from the beginning has been to accelerate sustainable energy. But if you say what percentage of cars on the road are electric today, it's still very, very tiny, like on the order of 1%, or I think less than 1% of the total fleet worldwide. So that's still a hell of a long way to go for going on the order of 1% of the fleet is electric. There's also a tremendous way to go on solar power, although it's exciting to see the advent of very cost competitive wind and solar and geothermal. And of course we need a large volume of stationary battery packs.
Good news, Elon is not planning on stepping down as CEO anytime soon. Several years he expects to continue as CEO of Tesla. Great news if you're a Tesla investor. He ain't leaving. He's a prime reason for the spectacular growth and the great results, and he's going to continue in that role. great stuff, and a lot of finer points. I love that point about the global fleet. We're less than 1% of the global fleet. We got a long way to go.
I was happy to see the update on the timing of semi, and had a couple related questions. And first, since semi trucks typically travel predictable highway miles, will Tesla Semi be the first to achieve full autonomy?
I think that's quite likely, yes.
Fantastic.
Yes, I can't imagine. I'm not sure who would be number two, but yeah, it seems highly likely, yeah.
It's the exact same part numbers on the semi that it is on the Tesla cars. There's no difference.
Yeah, it's true. Yeah, as it is, we need to modify the parameters, software parameters change for autopilot or full self-driving because it needs to know if it's in a Model 3, Model Y, Model X, or Model S. And so this is we just inform the vehicle, or inform the full self-driving brain that it is now in a semi-truck.
Would it need to be retrained then as part of that?
No. I think there will be. You'll have different control functions because there are turns that you could do in a regular car that you cannot do in a semi. Like you don't want to try to parallel park this thing on the street in city. It needs to know its limitations. Being a giant truck.
I think Elon may have misunderstood the question, or the question was misphrased. It sounded like what he was asking was, will Tesla Semi be the first full self-driving vehicle in Tesla's fleet? And Elon seemed to take the question as, will Tesla Semi be the first full self-driving semi-truck on the roads? And so the answer seemed to be unclear, and then somebody else, I think it might have been Jerome, chipped in with, wait a minute, all the vehicles will be full self-driving at the same time. That the semi will be full self-driving at the same time as the rest of the fleet. It's not going to be full self-driving before the Model 3, Model Y, whatever.
If you could just help explain why battery electric will win versus hydrogen cell fuel tech.
And Elon has talked about hydrogen so many times, I don't know why somebody would ask this question. This was probably the worst question of the entire call, but we'll hear what he says.
Yeah, I mean, honestly, I've had this question a million times for regular vehicles, even back in the early Roadster days, even before we had the Roadster out. People were saying, that somehow hydrogen is going to be a better means of energy storage in a car than batteries. And it's like, this is just really not the case. Hydrogen is it's number one on the periodic table. It's got very low density. It's got low density as a liquid. It's like styrofoam level density as liquid. And then it's only a liquid very close to absolute zero. So you have to have it's really not realistic to keep it as liquid. You want to have it as a high pressure gas. That has even lower density. So you need a gigantic fuel tank, volumetrically, and it's got to be very high pressure. It's a big pain in the ass, basically. If somebody was going to, say, use an alternate chemical energy storage mechanism to hydrogen, I'd say they should use propane or something like that, or methane, or those would be way better than hydrogen. And then having it be a fuel cell just adds even further complications to the situation. It's just crazy, basically. We're extremely confident that we could do long-range trucking with batteries. the amount that works out. If you just take, say, watt-hours per kilogram of currently available cells, and say, okay, how many, what weight would you need to go, let's say, 500 miles, and to what degree does that affect your payload? And it's like, okay, you can do this. If you do it right, you basically have no effect on your payload, or almost nothing, and you can have a long-range truck. I mean, Jerome, do you want to add to that?
Oh, I agree with everything, and we see also an increase on the regionalization of trucks, and I think it will be perfect. The Tesla Semi will be perfect for it, yeah. And I'm looking forward to having some additional ones on the road very soon.
But basically, we do not see any issues with creating a compelling long-range truck with batteries. Apart from cell supply. Cell supply is the only thing.
Self-applies it.
It is true. I've seen Elon talk about hydrogen many times. It doesn't make hydrogen fuel cells. It doesn't make any sense. He actually left out that the process of generating the hydrogen uses a lot of electricity, and it just ends up being a very inefficient way of storing electricity as compared to a battery electric vehicle. So probably the worst question in the entire call, because he's covered it so many times before. I don't know why he brought that up. But it was kind of a slap in the face to Nikola and this idea that these fuel cell trucks are somehow going to be successful. He did, again, talk about Semi as being a 500-mile range vehicle, not a 300-mile range vehicle. So I think the early Semis are going to be 500 miles of range, which makes sense. That would be the higher price vehicle. So that's my breakdown of the investor call. Tremendous amount of news in there. Model S and X, very exciting. A lot of great news about the 4680 pack. A lot of great news. It seems like all the execution is going well. Everything is going well. Everything's looking really positive. This is just spectacular news all over. The growth rates that they're talking about are stellar. I have a video coming up that I've been working on about the battery revenue model, and now I have new information, so my battery revenue model is going to be even more amazing than what I thought it was before. So a lot of great stuff to look forward to. Before I go, I just want to say, check out the shirts. The Elon B. Let's Wrong shirt is one of the shirts in the merch store below. Check out the shirts. If you like this video, please check out my other videos. Please support this channel on Patreon. I really want to thank my Patreon supporters. They make the difference. They allow me to put this was a lot of time for this video. And I want to thank you for watching. And please share your comments below. Thank you so much.